So
Yep.
this is the SmartHealth product.
Mhm.
And what this is, Jocelyn, it's a hybrid of fully insured benefits and a medical share plan. I don't know if you're familiar with what medical share plans are.
Mhm. Yeah, Patrick did send me this when we met last week, so I have reviewed this fully.
Okay. All right. So you probably have some questions.
Yes, I do.
I'm just going to kind of breeze through it like you haven't looked at it before, and then we can answer any questions as you have as we go along. I just want to give you a little overview of what share plans are, and maybe give you a little reassurance that they are a solid platform, that can deliver healthcare benefits to your company. Um, a fully insured plan like you're on right now with Blue Cross operates as a legal reserve fund. So a legal reserve fund, each state has their own insurance regulatory, body that regulates and monitors insurance companies. So a legal reserve fund operates under the guise of, let's say your current plan with Blue Cross, they collect maybe like $100 million a year in premiums from all their subscribers. A legal reserve fund would have to have 2 times that amount in a reserve. And they can't use that money to pay for anything. They can't use it to pay for claims. They can't use it to pay me or Patrick. They can't use it to pay the CEO's salary or the electric bill or anything else. The money just has to sit there. And as long as they're still collecting premiums, that really is the asset, of the insurance company. And basically, it's a financial safety net so that if the company were to become insolvent, there's money there to pay, the outstanding claims. A share plan, and there's only 8 of these in the United States.
Okay.
They were formed as an exemption back in 2009 under the Affordable Care Act laws. Most of them were formed under religious exemptions because the Affordable Care Act laws have mandated benefits that cover some things that violate some people's faith, like abortions and things like that. So share plans are filed as 501(c) nonprofits. And they are regulated by a different governing body. It's a financial governing body, not an insurance department, but they have to operate with a legal reserve as 4 times their annual collected premiums. So it's even a little more stringent as far as their requirement financially to service their business. My point is to give you a little reassurance that this is a solid platform. And the backing company the share company that underwrites this plan is called Zion. And they're out of Utah. Zion, Z-I-O-N. Yeah. And if you want to write this, they have a website, zionshare.org. If you want to look at that, there's some information on there about it. Now, this product that we offer is kind of like a private label of the Zion Share plan. People can enroll here directly, but they don't get the exact same plan as the SmartHealth plan. So we've enhanced it with some more robust outpatient benefits in particular. And there is Zion does not require any faith commitment. So there's people don't have to subscribe to any type of faith to enroll in the plan. They also don't have some of the other share plans discriminate against people for tobacco use. Zion does not. There is an upcharge on the plan, for tobacco use, but it is not something that would disqualify somebody.
What about any like, I guess if someone comes to this company with a previous health condition, do you guys honor that, or do they?
Yeah, so let's get into that, because I think probably from what you're telling me here, the people that are on the existing plan would probably be negatively affected by this. Mm-hmm. So what it might make sense to do would be just to keep the existing plan in force on those people. To keep the plan. I'm assuming you're on a small employer plan. You have to have at least 2 people to keep that plan active.
Correct.
So you could continue with that one. So let's get right to that, and I'll explain to you how. There's some information here that we just talked about what is a medical share plan, and but let's go over to the pre-existing condition limitations. So this plan has a 24-month look back.
Okay.
For pre-existing conditions, anything that someone's been treated for in the previous 24 months before they enroll in the plan could be considered for pre-existing for the first 12 months when they enroll in the plan, with exceptions for high blood pressure, cholesterol, or diabetes.
Mhm.
And that would include type 1 or type 2 diabetes, like in insulin dependent. Okay.
Okay.
So anything that falls, outside of those three conditions, if someone's been treated for it in the previous 24 months, would not be covered for the first 12 months when they enroll in the plan.
Mhm.
There's a phase-in period after that. After the year 2, they would have a $25,000 annual maximum, $50,000 year 3, and year 4, $125,000 going forward, just for that particular condition. Everything else is unlimited benefits. There's no cap. There's no annual or lifetime maximum on anything that's not pre-existing. So I'll give you a couple scenarios. Let's say that someone had a heart attack 5 years ago,
Okay.
and now they're just taking like a blood pressure pill. Maybe they're on a cholesterol pill or something like that, but they're not having any more ongoing treatment. Maybe they had a stent put in or something like that. And that was 5 years ago. That person would not have a pre-existing condition limitation with this if they enrolled in the plan. But let's say that same person 5 years ago had a heart attack, and now they're taking a blood thinner, and maybe they have a prescription for nitro patches. Maybe they get a little flutter once in a while, they get chest pains, whatever, they get the nitro patch. That person would have a pre-existing condition limitation because they're still under medical treatment for the previous event that was past 24 months. Does that make
Okay.
sense?
Yes, it does.
Okay. All right. So does that answer your questions about pre-existing conditions?
Yep. So pretty much same. And
Like the
I'm
person
just
who has
assuming,
the ovarian cancer and the person who's pregnant, this is probably not going to be a good fit for them.
right. Which I mean, I don't know if like those two situations, if we were just the secondary insurance, if we were, maybe they were looking at switching
Well,
insurance. I'm not sure.
this plan is guaranteed acceptance. Anyone can qualify. It doesn't, it wouldn't exclude them from being enrolled in the plan, but
Mhm.
it wouldn't pay any benefits for those, ongoing things like the
Correct.
pregnancy or, this plan does cover maternity, but someone can't be currently pregnant when they enroll.
Correct. Yep. I understand that. But
And
like
that's,
if they signed up now knowing that they're not covered and keeping their other insurance, dropping the other insurance after the waiting period, is that something that they could do?
yes, yes.
Okay.
Yeah, right. So let's go through the plan here, and I'll explain how all the benefits work, and if you have any questions, we can jump into that. So the basic plans begins with virtual primary care. It's just for telehealth visits, minor things, colds, flus, sinus infections, and so on. You can call and do televisits over the phone. That's available 24/7, 365 days a year. There's zero cost to use that. It's unlimited benefits, and that's telehealth's become a lot more relevant, especially since COVID. A lot of people use it more than ever. But that's free. There's also a basic prescription benefit that comes with that has $1 copay for your preferred generic drugs. Everything else is just discount, kind of like GoodRx.
Yep.
All your national pharmacies, Publix, Walmart, Walgreens, CVS, everybody accepts the discount card. Then moving on to the plus level coverage, this is for your doctor visits. So this plan uses a national PPO network called PHCS multi-plan. You can use it at any doctor. You have a $25 copay for in-network doctor visits. Out of network, you still have a $25 copay, and then they would reimburse the provider 125% of the Medicare allowable amount for the service. The national average for an office visit is $155. So if the charge is more than 155, you would get a balance bill, for the difference. My experience with it is that for primary care doctor visits out of network, it usually covers the charge 100% anyway. But for a specialist out of network, you're likely going to get a balance bill of $40 or $50.
Yeah.
All right.
So still, even if it's out of network, it's not like outrageously expensive.
Right.
Okay.
Annual wellness, like annual checkups, physicals, mammograms, female checkups, and so on, are all covered once a year, 100%. This is the only benefit in the entire plan that requires network participation. You can see here, out of network is not covered. All your national labs like Quest, CompuNet, LabCorp, and so on, they are all in the network. And then that also has all the benefits, that come with the basic plan with the virtual primary care and everything. And then the comprehensive piece, which was what Zion pays covers, is in the Advantage plan. And you can see what's really important here, I think, is there's no network requirement. So
Yeah.
you can go to any hospital anywhere in the world.
And then
The deductible is called a different terminology here because of the share plan. It's called an IUA, initial uninsured amount. And it's not a calendar year deductible like what you're used to. There are a maximum of 3 IUAs per 12-month period from the date of the first IUA. Now that's per person or per family. So if you have one person, if they have the 1,000 IUA, they could possibly be up to 3,000 out of pocket maximum.
So why does that reset though? So I mean, so someone could constantly, so say
No,
me, I
it's
could
a
be.
maximum of 3 per 12-month period.
Okay.
Okay. So let's say, like comparing this to your current plan, you have a 2,500 deductible. You have 80/20 co-insurance until you hit a maximum out of pocket of $4,000. So if you went in the hospital with your current plan, you would likely pay $4,000 out of pocket, and the insurance would pay the rest. If you went in the hospital with this plan, you would pay $1,000, and they would pay 100%. Now, if you had now your current plan, that would cover you for the rest of that calendar year if you had any other expenses. Now, if this plan, if those expenses were related to the first event, let's say you had like maybe, I don't know, like a torn ACL, and you have an outpatient surgery, you get the surgery, you go through physical therapy, you have some pain medications, maybe you wear an air cast for a while or something like that. All those expenses for that are covered for the next 12 months going forward.
Okay.
Even if that rolls past, a calendar year mark.
Okay. I get what you're saying.
But if you had in that same 12-month period, you had the ACL, and then you got cancer, and then you had a heart attack, you'd have to meet another IUA for each one of those events. All right. But the worst case scenario, if you go with the 1,000 IUA, is 3,000 out of pocket in a 12-month period.
Okay.
So in some ways, it's worse than a calendar year deductible. In some ways, it's better.
Right.
Because all the expenses are covered for the next 12 months going forward once you meet the $1,000, where your plan, you would have to start a new deductible over at the beginning of the year. So, it can work either way. You can see everything is paid 100% once the IUA is met. There's no co-insurance. There's no 80/20 or additional amounts to pay. Maternity is also covered. There's also a death benefit, $10,000 per primary or spouse, or $2,500 per child.
Okay.
And then there's an optional dental vision coverage that's available. What I like about this is that first of all, there's no network. You can use this at any dentist or any vision provider. And there's also no waiting periods. Okay. Most dental plans, when you begin a new plan, you have a waiting period for major services like crowns, root canals, and extractions and so on, as much as 12 months. This would have immediate coverage right from the start, no waiting periods. It has an annual maximum of $1,000 a year per person. It has a schedule here of reimbursement. This is done on reimbursement. You pay you pay up front and submit, and then you get a check back. Okay. And you can use it for vision as well. It covers one eye exam a year per person, and you can use it for lenses, frames, and contacts as well. Okay. And then there is an upgrade on the prescription coverage. It's called the Best Choice RX benefit. It's pretty inexpensive. We pretty much put these on group plans 100%. This would upgrade you from the basic RX drug benefit of just having the $1 copay for for the preferred generics, where you would have a $0 copay for preferred generics, a $10 copay for non-preferred generics, and a $40 copay for brand name. Okay. Let's see. And it's a pretty inexpensive. It's about $25 for a single person. I think the family's 37 or something like that. We'll look them up here in a minute. So these are the rates for the groups. We have to have at least 3 enrollees to set up a group. We can do less than 3 with the individual rate table, which is a little bit higher. But you can see here on the Advantage plan, this is what we're going to look at here with the 6 visit. There's 3 age bands. 18 to 29, 30 to 49, 50 to 64. There's no scheduled increase in premium here unless someone rolls across one of these age bands. And then you can see the cost for the dental vision, $56 for a member, $82, $104 for family. And then the RX upgrade, $25 for single person, $37 per family. Couple other things to remind you of. First of all, there is no minimum participation with this plan for your company.
Even under the group?
The owner of the company can pay 0 or any amount they want. That, like your current plan, the company has to pay at least 50% of any participating employee. So this can be structured however your owner of the company wants to do it. There's no minimum. It just has to be uniform. Whatever structure you set up, if you're going to pay a fixed amount or a percentage or none, it has to be the same for everyone.
One question on this too. So say we went with the group instead of the individual monthly rate. Say some person wanted the advantage, someone wanted the basic, someone wanted the plus. Can we mix and match?
You can.
You can. Okay, perfect.
Yeah. We said we have to have just have at least 3 people to enroll to set up the group to get the group rates. The rates for the basic and the plus are the same for individual or group. The Advantage plan has a different rate table for group versus individual. So what this does for you, Jocelyn, it takes you out of this small group of 40 some people or whatever you have here, 50 some people, and puts you in a group of over 150,000 people.
Okay.
You don't have to fill out medical questionnaires when you enroll in this plan. The premiums are not based on any one person's health. And that's what's hurting you with your existing plan, is that, if you try to change to another carrier, you try to go with Cigna or United Healthcare or something like that, they're going to collect health apps on everybody who wants to enroll. And as soon as they see somebody there who has ovarian cancer, or you got someone who's currently pregnant, they're going to give you a max rating. So it's there's no way out as far as staying with that format that's going to be a savings for you guys. But this gets you out of that loop, where you're out of this small group of people, where you get 1 or 2 people in here who are driving up the premiums for everybody else. It makes it unaffordable. And you're going to be in a group of 150,000 plus people.
Okay.
And again, there are no medical history questions asked during the enrollment with this plan.
Because we're in that big group, is that why the prices are so different compared to like what we have now? Okay.
That's correct. That's correct. They're spreading the cost over a lot more people. Got it. And it does have that pre-X limitation on the front end. So that's another reason that it's cheaper, But that also keeps the premiums down and it makes it more affordable for everyone else. There's a trade-off there, But my suggestion would be, there's 2 ways to maybe attack this, is to keep the people that are in the current plan. The owner, I don't know, he may want to disenroll and go with this.
When I told him the new price, he's like, yeah.
Yeah, I'm assuming if there's no pre-existing condition limitations that he'd be concerned about, that he would likely want to do that. But you can keep the group plan on the 2 other people and offer this to everyone else. Okay. Okay. So you set up the enrollment the same way you set up your current plan, like you set the elimination period for new hires. It's going to be 30, 60, 90 days, whatever you're going to do. And then you have an open enrollment period for everyone who wants to enroll at the initial enrollment. And then, then you'll have your annual, renewal, open enrollment period each year. New hires, again, you set the elimination period, however whatever terms you choose. And again, there is no minimum participation with this for your company. You can do a fixed amount, you can do a percentage, you can do nothing. I have some companies who do that. They just offer it to their employees. And the reason that you might want to do that is because the tax advantage, because this is still a Section 125 eligible product. So the employer, it saves your company money on payroll taxes if someone participates, because the premium they would pay would be done with pre-tax contribution. Payroll deduct, just like you do it now. And so that saves the company money and also saves the employee money by being able to pay the premium with pre-tax dollars versus after tax.
So, and I know I know I talked to Patrick about this last week. Not gonna lie, I kind of forgot the answer that I was given. I know when I was looking at on the bottom of this where it says smart health plans are not available in the following states.
Uh-huh.
So I do have a family in Washington.
Right. So
So
as long as
not,
your domicile of your company is based in an approved state, which is Wisconsin, correct?
yes,
Yeah, then we
yes,
can add employees on. Yeah, we can add employees on anywhere.
okay,
Yeah, that's not a problem.
okay,
Yeah, that person would not be able to buy an individual plan
got it.
in Washington State if they are a resident of Washington State. Yeah, but as long as your domicile, your company is in an approved state, then it doesn't matter.
Okay.
Any other questions?
Well, I was teaming my boss to make sure I ask any questions he would like. He just wants to know like the guaranteed cost. Now, would the cost ever switch, or all of a sudden any kind of hidden thing that we wouldn't, like we'd get in a bill or anything like that?
Well, the rates are, you see the rate tables, there's no scheduled increase like an annual increase with this. They can give rate increases periodically based on inflation.
Okay.
And you know, I've been marketing this product for about 5 years. I've only seen one scheduled increase with it. And it just happened about a year ago, April of last year. So I don't think it's likely that it's going to happen soon, but you know, you get a 12-month rate guarantee, you know, when you enroll in the plan. But there are no scheduled, you know, annual increases like your current plan.
Mhm. Okay.
There is the $50, you know, upcharge for tobacco use. But that's the only charge, the upcharge, you know, for a medical history question. That's really the only question they ask when they enroll.
Okay. And is that $50 monthly fee?
Correct. $50 monthly fee.
Those cigarettes are going to cost you, apparently.
Yeah, right. Good thing I don't smoke.
Yeah, like 10, 12 bucks a pack, and then an extra
Mhm.
$50 a month. Yikes.
Maybe it'll be someone's push to quit smoking.
Yeah,
Mhm.
it's expensive now, that's for sure.
Mm-hmm.
Any other questions?
Well, for people that, because I know, like some people here want to keep the same, if it's the primary care provider, internal med, whatever provider they have. How would we know who's in network, who's out of network? Is there like?
Sure. So there's a document. I'm going to email it to you. It's the benefit guide, but I'm going to show you how to search for providers. You go to a website, multiplan.com. And there's a link up here that says find a provider. This is all going to be in the document I send you as well.
Okay.
And then you're going to hit this green button here, select network. And then there's a PHCS, and then there's a very specific link here within PHCS specific services.
Okay.
And then you can search however you want here by doctor's name, by specialty. Like, what's the zip code there?
We're 54143.
54143.
Correct.
All right. So I'm just going to show you the local hospitals there.
I was going to say there may not be many in that area, but
No, we got one.
Oh, okay. It's a pretty rural area.
Yeah. And
Okay.
there it is.
There it is.
Yep.
So we see 3.5 miles, yeah, then 16 miles.
Yep. I forgot. I always forget O'Connell has one.
Yeah, within 20 miles, we got 2 hospitals there. So yeah, it is pretty rural, isn't it? Okay.
Yep.
Yeah, so this is where we look up now to review that for the doctor visits, you can use it at any doctor. It's going to be the difference, you know, of, you know, you still have the 25 copay either way. If my experience with this is, you know, they're going to reimburse the provider out of network 125% of Medicare. The national average is 155. Now that's going to vary, you know, in Wisconsin, it might be $105, you know. If they charge more than that, you'll get a balanced bill, you know, out of network, maybe 20 or 30 bucks. Yeah. But in-network, you just have the flat 25 copay. But you can use it at any doctor. The only benefit, again, in the plan that requires network participation is for wellness.
Yep.
So annual checkups, physicals, mammograms, female checkups, things like that. You have to use the network. They don't pay for it out of network.
Mhm.
But everything else, you know, especially in the comprehensive piece, is all no network requirement.
Okay.
So there's really not, you know, it's not really much of a difference whether someone goes in or out of network with the plan, only for the preventative services.
Yep. Okay. Hmm.
The enrollment with this, Jesslyn, administration of it is very simple. Like I said, there's no medical history. There's no big long applications that the employees have to fill out. It's all done electronic, and we just, you know, we'll send you a spreadsheet. You can just complete it, and we collect all the information. Each employee gets a text message on their phone. They do a verification step, and then all their plan documents, ID cards, everything is all delivered to them electronic via email or download. And so it's a very simple, clean process. It takes, you know, literally 5 minutes per employee to get them signed up. We can set it up for a single check list bill payment. You can either do, you know, send in a paper check, do electronic funds transfer, or a credit card payment, however you want to do it as far as the payments or the premiums.
Okay.
There is a cutoff of the month for the group enrollment for the 15th of the month. So if you want this to start on July the 1st, we have to have this enrollment completed by June 15th.
Okay.
So if you're trying to, you know, get out of this other plan and avoid a gap in coverage, then we need to get started.
Okay.
There's a setup form Patrick will send you to complete to set up the list bill agreement. That takes about 24 hours to get turned around. And once you get that completed, then we'll get your group enrollment ID. And we'll send you a template where you can complete with all the employees who want to participate.
Mhm.
And we'll start begin the enrollments, and everything will start on July the 1st.
Perfect. And then you said too, like, you can kind of join or cancel whenever, or was that the video I saw? Something about being able to cancel or something?
You can opt out at any time.
Okay.
Mhm.
I'm just wondering, like, say if we have an employee
The
that.
enrollment has to be done, again, you set up the enrollment, the open enrollment period when you set up your plan design. You can set up your elimination period, you know, however you want to do it for new hires, you know, 30, 60, 90 days. That's, you know, whatever makes sense for you guys.
Okay.
And then you'd have your, you know, people who don't enroll in this first wave here would have to wait till next year, you know, during the open enrollment to, you know, to enroll.
Okay. And when is open enrollment for next year, just so I can let everyone.
Well, if we started on July 1st, and let's say your waiting period on your plan is, you know, 30 days or 60 days, whatever, then it would be 30 days or 60 days ahead of that date.
Okay. Okay.
That's up to you, how you guys, you know, want to set that up.
Okay.
Okay, Tim, for a new employee, Tim, would that work the same way? Let's say they hired an employee in September.
Yeah, if somebody gets hired next month, you know, in August or whatever, then again, whatever you set up their waiting period, 30 days, 60 days, whatever you want to do, then that's, you know, they're eligible to enroll after that date.
Okay.
And then we'd have the same thing. They'd have to enroll by the, you know, before the 15th of the previous month to get started, you know, for the following month.
Yep, that makes sense.
Yeah. And you'll have access to Patrick as your servicing agent, you know, for questions about claims, benefits, add-ons, deletions. You know, we provide ongoing service.
Perfect.
Yeah, and for me, that's 24/7. I mean, you know, any of your employees can always text me if they have a problem. They have questions about telehealth or anything, send me a text message. I'll get back to them.
Okay, perfect.
Pretty quick.
Yeah, we can barely reach our insurance guy now when we try for days.
No way. Wow.
Yeah.
Wow,
Yeah,
that's
it's annoying. That's why I'm like, I just want to wash my hands of them and be done.
Yeah.
wow. Okay.
Well, your situation is not unique, Jesslyn. This This environment you're in, this small employer format is the most expensive way to deliver healthcare. You pay the highest per person, and the reason is because your programs are guaranteed acceptance with no waiting periods, and you don't have large pools of people to spread your risk among. And it starts out a company, it starts out small. Maybe they have a handful of employees, and they have to start offering benefits to attract higher quality, and they want to create loyalty. And they enroll into something like what you've done, and then 2 or 3 years into it, their premiums like double or triple what they started out at. And it was just like a runaway train, And so this gets you out of that loop, where you have a more defined cost and in my opinion, a very attractive benefit package. I mean, your out-of-pocket limits with this are a lot less than your current plan. Your max out-of-pocket here is $1,000. It's 100%.
Yep. Yes.
All right. If you have any questions, reach out to Patrick. Have you sent her the group setup link?
I have
Patrick?
not. I have
Okay,
not.
we'll get that over to you. That'll be the first step, is to get your employer company information and so on. And then again, we have to have the enrollment complete by the 15th. That's the deadline for July 1st effective date. And we'd like to get that set up for them. There's no financial commitment there, just to get that done. It takes 24 hours. I'd like to get that done as soon as possible.
And then for making the payments, if we still do like the payroll deduction, would that still work with you guys?
Yeah, you just set that up in your payroll just like you do now. You just divide it by 4 or however you're going to do it. Your pay period is weekly, then you just do it, just divide it, whatever portion they're going to pay by 4 as a pre-tax deduction.
Okay. Easy enough.
All right. Appreciate your time.
Yes, thank you so much.
All right.
Yeah, thanks, Jocelyn. Appreciate it. Thank you, Tim.
Thanks for giving me that taxi ride. It's saving us.
Yeah, no kidding, right? It was, and I just heard them over talking